So you didn't read the title wrong. I am actually in the process of selling all my stocks at the moment, but there is a very, very good reason. And it's not because I think we're heading to some kind of market crash or I'm trying to time the market or anything like that. But I do think there's a really good chance now, before we head into the new financial year, to try and get everything in order and get everything where I want it to be. Because the problem that I have, and maybe some of you also have a similar problem who've been investing for quite a long time, is that for someone who's been investing for the best part of a decade, I've got different accounts, different portfolios and investments kind of all over the place at the moment. And embarrassingly enough, for someone who runs a personal finance and investing channel, I've got stuff, lots of it, actually outside of tax protected accounts. So outside of our ISAs and SIPs or anything else that we've got here in the UK to be able to protect our investments. So as much as I keep banging on the drum on this channel to make sure you use your ISAs and use all your tax-free allowances, of course, that's never necessarily been a massive concern for me, as we've had those allowances in the background, those capital gains allowances and those dividend tax allowances to be able to take advantage of each year. And my plan was always, over the next few years, to get all of my investments into tax-protected accounts. But as many of you will know, those dividend allowances and those capital gains allowances are being slashed in half as we go into the new financial year. So while I'm talking, I'll pop them up just next to me here so you can see as we go into next tax year what those allowances are going to be, and then we go into the next tax year after that one, what those allowances will be further after that. But essentially, it means that those tax-protected accounts and those ISAs, especially the stocks and shares ISAs, are going to be more important now than ever. So as someone who's been invested for a long time, it's now time to finally clear up the portfolio, get as much as I can in this financial year, and also next one too. So here's the plan. I was just running some numbers on an Excel sheet, trying to go through all of my different portfolios, working out where money is and where things are invested. Roughly at the moment, I've got about half of my portfolio, give or take a few percent, in tax protected accounts. So you'll see this in my Vanguard portfolio updates that I do regularly. I have money in my SIP, and I do have an ISA with Vanguard too, where a majority of my investments sit. However, I do also have another large portion of my investments on my Hargreaves Lansdown portfolio, which at the moment is just in a regular fund and share account. Now, I have had an ISA before with Hargreaves Lansdown. I've had a SIP as well, made various changes over the last couple of years, many of which have been featured on this channel, but now is a really good time to sort things out. So here's the plan. Let me put this up on screen now. I have a rough kind of pie chart of where I'd like my investments to sit. And again, this is going to be unique to you, so definitely make sure that you do plenty of your own research and figure out what works for you. Now, personally, I'm jealous of many of you who can keep things really simple and just invest straight away into a stocks and shares ISA and just invest monthly, don't look at things and just invest in something like a global index fund. For me, I do want to be a little bit more hands-on, I'm a little bit more picky, and I guess that just comes with my nature, as someone who likes to have a little bit more play around. So as you'll see on screen now, this is kind of approximately what I'd like to get my portfolio to. Most important thing though is as much as possible inside tax protected accounts. Of course, something like cryptocurrency or anything else like that is not going to be able to be protected, but we'll leave that as a completely speculative side of the portfolio. So around 70% or so, I'm going to say wants to be in index funds or ETFs. Around 20% or so, I'm going to have as my kind of stock picking and playing around a little bit more active side of the portfolio. And then the rest I'll dedicate to speculative stuff. So I do have a bit of private equity and then a bit of crypto as well. So, and on that crypto side, no, I don't own any coins with dogs on them or monkeys or anything like that. It's just Bitcoin and Ethereum. In fact, mostly Bitcoin. And it is purely speculative. There is no way to value Bitcoin whatsoever. It's no cash flows at all that you can actually measure. I do think for the long term, it is a potential hold for me. So anyway, that's what I wanted to get it to look like in the future. And at the moment, it's probably more like 50-50. And to be honest, in my stock portfolio as it sits at the moment, things are a bit of a mess. There's no real thought about how things are allocated. I don't necessarily have the most money in things with most conviction. And really, I want my individual stock picks to be a place where I have real conviction and a real chance of beating the market. Because as we know, active management and actively trying to beat stocks is really, really difficult in the long run. You might have a good couple of years, you might have a good 5 years, even a good decade, but trying to beat that market over that very, very long period is very difficult indeed. So I want to kind of rein myself in, really focus myself on what I'm going to have. So plan of action I'm going to put together is sell these stocks in Hargreaves Lansdown, move £20,000 worth of cash into a trading 212 ISA. Now, luckily, I haven't actually used any of my ISA allowances at all this year, as I've actually tried to build up this YouTube channel and make sure I can pay for my own bills in the background. And then next financial year, what I intend to do is move the rest of that £20,000 or so into InvestEngine, where I'll use that to buy ETFs and mainly index funds. I may go a little bit more complicated, or I may go super simple with just 2 funds or something like that. My plan is also on that one to invest half, roughly, maybe 5 to 10K as a lump sum into index funds, and then drip feed over the next maybe 6 months or so, maybe 1,000 or 500 or so every single month to get myself up to that maximum £20,000 allowance. Now, the reason I'm choosing those two providers, Trading 212 firstly, is pretty much completely free in terms of the ISA to use. There's no platform fees there. There's no trading fees as well. And there's also good benefit with fractional shares. So I can pretty much build up a portfolio of however I like. Now, you could say, yeah, you could keep everything on something like Trading 212 because you can buy all of those ETFs and index funds as well. Now, this is more for my own mental peace of mind, but I would like to keep those individual stocks separate. So in my head, I know this is my stuff I can play with, and my index funds and my ETFs, which I'll run on InvestEngine, I want to keep really, really simple and then have those two things separated. But of course, if you want to keep things simple, there's no reason at all why you can't do most of the things I'm talking about just on Trading 212 or some other different trading platforms. I'm making it a tiny bit more complicated for myself, more just to have that separation. Now, one of the next videos I will be doing will be comparing all of the different best stocks and shares ISA, so do look out for that one. But in the meantime, if you do want to open anything from a Trading 212 account to InvestEngine, check in the links in the description. And many hundreds of you so far have taken advantage of that. And hopefully some have got to some pretty good free shares as well. So just keep an eye on for that one. I'll always have the links below. Now, one of the only other accounts that I will have on the side is many of you will follow my free trade dividend portfolio. This has got a few different UK stocks and it's got about £3,000 in at the moment. But again, it's not a stocks and shares ISA. It's just a regular fund and trading account on that platform. So again, the question might be, what do I do with that money? Do then I move that into Trading 212 and buy some stocks there? Or there is an alternative as well. I do have a small amount of personal debt that I would like to cover off, because on a personal basis, in my own personal finances, I would actually like to be completely debt-free other than my mortgage, because I do think it's important to practice what you preach. And in terms of personal finances and keeping my costs as low as possible, gives me a lot more freedom when it comes to actually investing and trying to get more money into the market. I don't really have necessarily goals in mind about what I want in terms of the future finances, but I do know that if I keep my costs as low as possible in my personal life, then I just basically get a lot more doors open and options for my investments, whether that means, retiring early or whatever that means, or just having the option to do various things in my life. I think the less I keep my expenses low that I can, the more options I get in the future. Anyway, so I hope that kind of helps if you're thinking of also trying to get your finances together as well, moving various ISAs around. So for the time being, that will mean that I'll have my SIP with Vanguard and an old ISA, which I'll keep there. I'll have a new account with Trading 212 for this year's worth of ISA for individual stocks. I'll then have an InvestEngine account for my new ISA, which will just be for ETFs, aka an index fund. I'm not going to get too clever with that one, which then should do this pie, which I showed earlier, something like a 70-20, 70-30 split in terms of the individual stock picks and kind of private investments versus index funds. And will that change in the future? Maybe. Should I keep things really, really simple? Yes, you should if you can, definitely. I probably make things a bit too complicated for my own sake. And I'm a bit of a nerd as well, so I do like trying new platforms. I'm perfectly fine trying, newer companies as well, as long as they are FCA protected. All of that cash and all those investments are separated from the individual businesses. So from that perspective, I'm not necessarily bothered. If you have hundreds of thousands of pounds, millions, or you're just getting started, of course, that decision is completely up to you where you want to invest your money. Always do make sure that you are using FCA regulated brokers and that sort of thing. And also, don't be like me many years ago and actually read up and understand what a stocks and shares ISA is. Look at your cash ISA too. Don't forget your lifetime ISA as well, especially if you're looking to buy a house. Remember that one. Did a video soon on that one. Make sure you catch up on that one as well. So final part of this video really is just over to you. I'd love to hear your thoughts in the comment section below. Good, bad, maybe. Am I missing anything? What your kind of thoughts are. Also, are you going through any of the similar things at the moment in terms of thinking, what do you do for the new financial year? Don't forget as well with things like ISAs, you can move them from old providers to new ones too. And that will be a topic I'll be talking about when I do my best ISA video. You don't have to leave old ISAs in potentially very expensive accounts too. So try and think about your own finances if you've been in the game for a long time. If you're brand new, do let me know what you're worried about at the moment or any questions, and I will see you in the next video. As always, happy investing.